As a mutual fund distributor or advisor, how often we look at mutual fund scheme ratings to make our investment decisions. And in this video, I'm going to simplify how these ratings are being calculated, what you need to know about these ratings so that you can make better informed decisions regarding your mutual fund investments. So I'm going to discuss with you how these ratings are calculated, what you need to look into it, and what are the various aspects which is being considered by these companies while arriving at the ratings which they give to these schemes, so that you know in and out about all these ratings which is going to work for these mutual fund schemes. Hello everyone, I'm Shobhit. I'm a Finbase growth expert and founder of Finbase Growth Club. We are an aspiring community of new age mutual fund distributors who are determined to change how India invests. And in case you are going to stay with me till last, I am going to share with you a free resource in the form of ebook, which is going to work as a ready rock now, but more importantly, it will have all the required information and resources which is going to guide you regarding mutual fund ratings. So let's understand one by one. I'm going to discuss with you three ratings, CRISIL rating. Then I'm going to discuss with you value research, and in the last, MorningStar, so that you have a clear-cut idea what these ratings are all about. So first, let's start with CRISIL mutual funds ratings. Now, this is a rating which is provided for all the mutual fund schemes in India, especially which are open-ended schemes, have at least track record of 1 to 3 years time period. So at least they should be in existence for 3 years, or for some schemes they consider 1 year also to start judging those schemes on various parameters. They also have some minimum threshold which these schemes has to qualify in terms of the AUM they have, so that they are able to judge those schemes. So what are the criteria which they are going to use? The criteria which CRISIL uses is, first they are going to use mean returns for judging the performance of the scheme or giving their ratings. So what is mean returns? It is nothing but the average return for the period for which they are judging those schemes. At the same time, they are also going to see the volatility in the performance of the scheme. So performance they are going to judge in terms of standard deviation. They are also going to look into the concentration of the portfolio in terms of industry. So if a portfolio has a more concentration in, say, banking or pharma, then they are going to look that as a negative pointer. They are also going to look into how the company concentration. So if a fund has a high weightage on a particular company, or they have invested more money in the particular company, that is also being considered as negative. They're also going to consider liquidity analysis. It means if they think some sector is having a negative liquidity concern, that is also going to be a factor while they are going to give a rating to a scheme for their performance. So these are some of the highlights which I wanted to share with you. And now let me give you a glimpse of how they are going to give the weightage for these all factors. So if you look at, I've taken a screenshot, and if you look at this, the mean return, the weightage which they are going to give for all the large cap, mid cap, multi cap, flexi cap, and other equity funds is 55%. So in 100, 55% weightage is given to the mean return. For the volatility, they are going to give 25% weightage. For company concentration, 5%, industry concentration, 10%, and liquidity, 5%. So these are the factors which are going to play out when they are going to judge the performance of a particular scheme. And this is for equity, for debt, or for hybrid schemes. They are going to give different weightages. The ebook which I'm going to share the link in the description, that is going to have all the details and resources which you can dive deep into. So these are the parameters which they are going to be using to give a score to a fund. And once they have arrived to a score, they are going to give the ranking for all the schemes which are available. and how these rankings are going to be read into, let's discuss that. So the ranking are looking like this. They are going to give CPR or CRISIL fund rank 1, 2, 3, 4 or 5. Now they are going to give a rank based upon the percentile of the fund performance on the parameters which we have discussed. So if the percentile in which the scheme comes is in the 1 to 10 percentile, then they are going to give them rank 1. If it is between 11 to 30, then they are going to give rank 2 or CPR 2 for that fund. How you are going to read that CPR 1, CPR 2? CPR 1 or CRISIL fund rank 1 is very good performance, 2 is good performance, 3 is average performance, and so on and so forth. So this is going to be a very good judgment call, we can say, which is going to give a clear-cut idea how this performance has been calculated and what it is going to mean for you. So this is about CPR or CRISIL rating. Now let's talk about value research rating. Now when we are going to look into value research rating, what they are going to consider, first understand that. So they are going to look into 3 years and 5 years performance of the schemes to judge a mutual fund scheme performance and give them ratings. So their fund should be at least for 3 years into the market and have a performance history so that they will start judging it. For that scheme, they are going to have a time period of 18 months. Now, every category which they are going to judge, at least 10 schemes should be there in that category. So if they are going to judge, say, a large cap fund, then they need to have at least 10 large cap fund in that category. Same way the other categories also should have a minimum of 10 funds to be judged. Other threshold which they have is at least 5 crore AUM of a scheme should be there to be judged by value research and give them ratings. So these are some minimum thresholds which they are going to be looking at for going to be rating any scheme. And once that threshold is passed, then they are going to use 2 parameters to judge the performance of the scheme. The first parameter which they are going to look into is the risk score. Now what we mean by risk score? Generally it is volatility, but value research is going beyond the volatility. They are going to also consider the opportunity cost which customer is going to lose in case the fund is underperforming. Now what that means? That means is suppose a fund is performing and given a 5% return. But if you are getting a risk-free return of 5.5%, it means you are going to lose 0.5% in performance for the without risk return which you are going to get. So they are very particular that if you are taking risks in the investment, you should be generating additional return over and above the risk-free return which market is providing you. And what is the benchmark value research uses? Value research is using SBI term deposit rates for judging the risk-free return. And once they have the risk score, they are going to look into the return score, and it is to do with the risk-adjusted return by considering the volatility with the performance. So once you have these 2 scores ready, then they are going to come for the final score on which they are going to rank the scheme. So the return score minus the risk score, that is going to give you the final points to a scheme. And once they get all the points of the schemes in a particular category, they are going to rank according to this matrix. So they are going to give a 5-star rating to the top 10% funds in that category. Next 4-star rating will be given to next 22.5% of the scheme. Now 3-star will be for the 35% of the schemes which is falling below the 4-star and 5-star ranking. So like this you are going to get the insight and the ratings of the mutual fund scheme. So I hope now you are clear how a value research is going to judge the performance of a scheme and how they are going to give ranking to or rating to the various mutual fund scheme. Now once you are clear on this, now let's dive into how MorningStar is going to judge and give ratings to a mutual fund scheme. So as usual, Morningstar is also looking at least 3 years of performance or existing of a mutual fund scheme. More importantly, Morningstar also give weightage to the age of the scheme. So if the scheme is there for 5 years or 10 years, that is also going to have an implication on the ratings which Morningstar is going to give to a particular scheme. They are going to update the performance or the ratings of the scheme on a monthly basis based upon risk adjusted parameters. It means what is the return the scheme is generating vis-a-vis the risk they are taking, but they are also going to consider the cost or expense ratio of the scheme, because they believe that the expenses are also going to play a very important role in the performance. But more importantly, as the previous two ratings, which is CRISIL and Valueresearch, only going to give the ratings, and they are going to tell you specifically that these are only an indicator based upon the past performance of the scheme, and this is nowhere going to guarantee you a future performance. Morningstar is going to go one step further, and they also give their analyst rating. Now, what this analyst rating is? Analyst rating is going to give you a future prediction. What is the likelihood of these schemes to perform in the future? So besides they giving you 1 star, 2 star, 4 star, 5 star rating, they are also going to give you analyst ratings in terms of neutral, negative, gold, silver, or bronze. If a fund is having an analyst rating of gold, it means it is going to perform better compared to other scheme in that category in the future. So this is the plus point which Morningstar would have. Now let's talk about what are the parameters they are going to look when they are going to give a star rating to the fund. To give a star rating to the fund, first thing which they are going to look into the risk adjusted parameters. It means what is the return the fund has generated by the per unit of risk that fund is taking. They are also going to consider the cost of the fund or the expense ratio of the fund, which is going to give a negative weightage to the points which they are going to give to a scheme. And once they are going to create that list with all the weightages and performance, then they are going to follow a bell curve to give ratings to the various scheme. So the top 10% of the funds are going to be given 5-star rating, next 22.5% 4-star, and so on and so forth, just like Valueresearch. And these ratings are going to be published and updated on a monthly basis. Now, besides this, they are also going to give analyst ratings, and that is going to be based upon 5 P's which they are going to be judging at. So they are going to judge at people who is going to manage that fund, parent, which company that funds belong, the processes which they are following to take an investment decisions, the performance, and also the cost. So these are the 5 things on which they are going to judge the analyst ratings for the fund. Okay, so they are going to go beyond the numbers. They are going to add subjectivity to giving an analyst ratings to the fund. Okay, now they are not going to follow any bell curve. They are not going to judge all schemes, and once they have done that, then they are going to give a gold, silver, bronze, negative, neutral ratings to a scheme, which is going to help you in getting an idea how these schemes can perform in future. So this is 3 ratings which I thought I'm going to discuss with you, which is going to give you a clear-cut idea how these funds are being first judged and how on those judgments they are going to be given ratings. If you got some clarity, I would be happy if you can hit that thumbs up button. If you like the content, I would love you guys to subscribe to our channel so that we can help you in future financial investment decisions. And don't forget to download the ebook which I have created for you, which is going to have all the information which you would be needing regarding the ratings and performance of the mutual fund schemes. So this ebook will be very helpful for you. I am going to leave the link for the ebook in the description. Thank you very much for watching. I hope you got some good insights. Till I am going to see you next time.